evening, ladies and gentlemen. Finance is the only organization in a department in an organization which normally pressurizes the other functions of the management. But it's a reverse case today because the finance topic and the session is being put into pressure because of lack of time. And we'll try to do justice for that, and maybe a little bit technical, but definitely I'll make it as interesting as possible. By the way, I'm Swaminathan. By profession, I'm a chartered accountant and a chartered shipbroker. Had a varied experience of in bank and also shipping company and also a manufacturing company. This is a brief of it. And I welcome my team panelists. Mrs. S.K. Joshi, the former Chairman and Managing Director and Director of Finance of SCA, and she was ex-ONGC as a Director of Finance. She is a cost accountant by qualification, and her achievement was in 2009. There was so much of achievement during her career in SCA as well as. And MT Swarna Krishna, all women sailing, she was credited with all women sailing, the vessel she made it, and she is credited with the vast achievements in SCA as well as in ONGC professional careers. Along with me, Mr. Asit Ranjan Sikdar, Senior Vice President Infrastructure, State Bank of India, and he is a chemical engineer turned banker with an IIM Ahmedabad qualification, experience in investment banking. He worked in SBI Caps, ICICI IDBA, advisor for JNPA with the 4th terminal, advisor to Indian Port Global Private Limited, and a vast experience in foreign currency fundings. And along with that, Mr. Madhu Nair is a current Chairman and Managing Director of Cochin Shipyard and has vast experience in maritime and naval architecture. And he is a Master's in Engineering Naval Architecture from Osaka University, Japan, and BTech from Cochin University. And the 4th gentleman is Mr. Naveen Kumar, Chief Operating Officer of Driver Logistics, had been with DHL Logistics, USA, Singapore and India for over 25 years. With this brief introduction with my panelists, I start with a few lines what the maritime industry is expecting. The maritime industry aims to optimize the risk capital, maximize debt leverage, reduce earnings volatility, limit capital investments, conserve cash flow, increase business using creative contract pricing through derivatives, and enjoy potential tax benefit, synergize all available resources for better risk management and achieve corporate goals amidst of volatile and cyclical business. That is what is called the maritime industry. With these few words, I would like to discuss with my panel the topics, and we'll hear from them all, their expertise. Each of your panel members, I request them your area of financing, area of experience in maritime financing. Maritime financing, ship financing is entirely different. Okay. Please, you can start with Madam.
Thank you, Mr. Iyer. So my experience in maritime financing as the CMD and Director of Finance of Shipping Corporation of India was obviously in shipping finance. And while I was at the helm of affairs, I handled both refinancing of the existing loans that were taken when the interest rates were pretty high, as well as we did a lot of second-hand vessel acquisition and the financing of those vessels. I am being brief so that we can have the optimum introduction.
I am from the shipbuilding space, so the experience in financing has been largely on the shipbuilding side. So that's in shipbuilding, you talk about the projects, so the project financing part of it, and then from a capex point of view, from your infrastructure development point of view. So there's the infrastructure finance board we have been involved. I've also been heading Cochin Shipyard when we did our initial public offer, and this was a very successful IPO. So we have approach the markets both in India and globally. We have done a full Reg 144A in the US, and these days we are also talking about sustainable financing. We are potentially looking at raising finance from the international markets through blue bonds. So these are the areas in which we have worked.
Good afternoon, ladies and gentlemen. This is Asit Ranjan Siddhar from SBI Capital Markets. At SBI Capital Markets, we had the experience of financing as well as restructuring of all the three sectors, sub-sectors I would say in the maritime, both ports, shipping, as well as the ship making facility, what is called shipyards. We pioneered the first dollar-based financing for JNPA, $400 million. We had been participated in the Chabad port concession agreement. I personally was there. For Bharti Shipyard, we were part of the restructuring exercise. So our experience has been extensive, particularly for me for the last 18 years. And we continue to have more experience in the near future. Thank you.
Thank you, moderator. My experience in maritime financing is close to zero. I have no clue. I come from the logistics and freight forwarding world. But based on some of my observations, make a couple of comments there. One, I think there's been a lot of discussion about what model should we adopt in order to develop this maritime finance, right? Some of the good ones, obviously, I think, some of the speakers mentioned about Norway. I think they created a separate bank, just to, promote the industry. The second model I've observed is, we talk about Norway, Singapore, many of these countries. If you look at their size, they're really small countries. So they can do many things. If you look at our scale, should we model a Singapore or a Norway? Probably doesn't make sense. One of the good models I've observed in the international markets is the Chinese model, where they have done two things that are quite interesting. One is they collaborated with Singapore, created a joint financing mechanism where they did the large ports like Shanghai, etc. They invested themselves. They did not look for any partnerships. On the other hand, for the smaller ports, they took the PSA's help. So PSA International runs most of the smaller ports. The larger ports are with the Chinese, their own investment. So probably there is some lessons for us to look at.
Thank you, gentlemen. Drawing on the experience of the panelists, this question is addressed to the banker. LTV is when you set the first-hand vessel, the new vessel and the second-hand vessel you can fund for, the banking industry is ready to fund. The most important on this is the LTV, loan to the asset value. I buy a ship today at $100 million. Down the line 3 years or 4 years, I put a certain amount of financing. Say 80% you are given. Down the line after 4 years, the same ship which I bought it at $100 million is costing it now at market at $180 million. Do you have got an additional funding facility from the banking sector? As a ship owning company, I request the ways and means.
So you touched upon the concept of LTV. So for a banker, the LTV is like, I don't know whether you are aware of fixed asset coverage ratio. Only thing is that here the ratio is different or inverse. It should be less than 1, that is 0.75 to be exact. The banker, when they look at the valuation report, there are usually 3 parts. One is the market where it is getting valued. Second is what is the earning capacity on this ship itself, and third is the salvage value. If you go to a banker typically feels if the age of the ship is within 15 years, then they are able to give a 7-year, 8-year loan as a part of it. And they are usually driven by the 3-year phenomena. When there is a valuation carried out, they have this called market value, which usually fixes for 3 years. So they don't change it, whether it goes up, whether it goes down as a part of it. Having said this, so far as if the ship value becomes more, typically the borrower itself comes back and says that can you refinance, if not they can go to somebody else. It depends upon bank to bank policy whether they are comfortable with the borrower as a part of the risk appetite, and if it appetite is SCI for example, they would be open, double rated companies. So that is something which is there.
Sorry,
but nonetheless this is what it is.
Sir, if you look at it, the overall Indian, when international market, the credit rating companies, when they approached Indian ship owners, they could not do a rating because basically the country is yet to develop their standard long-term shipping policies, which is yet to be in place. So in that season, how do you expect, one is, as I said, the LTV enhancement. The second one is second charge, creation of second charge on the same ship. Why the banking industry is shy of doing that?
So second charge itself is avoidable. Second charge as per banking, it says no charge. Because the first charge itself does not get discharged fully, where is the question of second charge. So for second charge, it is not only for shipping. For any industry, the banks, they take it as an unsecured facility. If they are happy with the credit, for a strong creditor, they may not take charge also. For example, when we raised funding for JNPA, $400 million, it was an unsecured facility, and we got bidders, largest by SBI and international bidders. It purely depends upon the credit rating of the borrower. Second charge is a no charge for a banker, practically. You can have for the sake of saying that, second charge is there, but they don't consider this as a charge. They are not comfortable with anyway.
So this requires a change in the legal framework of the country?
No, it's not legal framework. Second charge is a charge. You can still go ahead and file it in the register.
One is, as a ship owner, I say, you don't give me a pari passu charge also. In case I go to some other person and you don't give me an NOC.
When I give a first charge and a pari passu, it is still a first charge for somebody. It is not a second charge. It is not a second charge. Second charge, I am not going to give I am not required to give an NOC for a second charge.
Okay.
If somebody lender is happy with the second charge, let him do a second charge. But anyway, it is not a second charge. The issue which comes is that, indebtedness of a borrower is always capped or always monitored. You cannot go and violate that indebtedness. Charge comes much later. So if suppose a borrower has been told that you have been capped at 100 million or a 200 million, he cannot go beyond that. Otherwise, it's a violation of that agreement which he has done with the lender. So that is something which the borrower has to.
You're talking about joint lender agreements, JLA.
JLA comes later. It's an agreement of a different situation in the sense that all lenders agree that.
I would like to pose this question to Mr. Madanoy.
Mr. Iyer, can I?
Yeah, please.
Because in continuation, since we've in Shipping Corporation dealt with State Bank extensively, and I must say that the State Bank supported shipping a lot, but I'll just like to add on to certain things for the benefit of the audience. You talked about an asset which is 100 million and then it gets reduced to 80 million. The valuation of vessels, as you know, is directly dependent upon the cash flows and the market. I mean, that is the basis on which the ability for an asset to be able to pay for its, so more of a type of a project financing. And many times it happens when the markets go bad, like we saw in the offshore market, when the oil prices had dropped to about $30, $33. So a lot of assets get impaired on the balance sheet. And when the assets get impaired, that is the time when the banker actually asks for more collateral, because they feel that now the asset which has been mortgaged with them is not sufficient to cover the loan that they have. So this is a particular thing which we've experienced in Shipping Corporation, that impairment may be a temporary phenomena, it may reverse the next year, but once an asset is impaired, because that comes onto your balance sheet, the lender will always ask you for extra collateral. That is one thing. And the second thing is, once you give a collateral to the bank, getting it back is very difficult.
Exactly. This is all the point I touched upon. Thank you. Fine. Good. I'm happy that the point is picked up correctly. Mr. Madhuran, I would like to know, see, a lot of shipyards are there, and in India, the funding is a critical aspect, either you go to the public. In India, the debt market has not been fully developed. I'm talking about the listed debt securities in the market is very limited. So to develop, countries now, in equity market has developed in 20 years very fast, but is not so in the debt market, the bonds market. So in that way, ideally, this type of infrastructure industries, including shipping and the logistics as well as the ports and I would say that the shipyards, should develop a system where which the bonds can be issued, which can be subscribed and can be listed in the market, in which you can have a cheaper financing as well as a secured financing from the Indian itself to avoid I would use the word the rupee volatility from the international debt funding. What's your view on this?
See, again, I go with the banker. See, whether it's a debt financing, we are talking about secured debt. Because if somebody is willing to finance without security, well and fine. But typically, we are talking about a security. So whether it's secured debentures, we have raised secured debentures in the past, domestic market. We could go to the international market, we can do it. See, when you are raising money from the international market for deployment within the country, what happens is, there is a forex risk part. And the forex risk, if you are talking about covering the forex risk by hedging, and you can't go beyond a limit because of RBI guidelines, but if you have to hedge it, then you are practically coming back to Indian rupee levels. This is why people like us, we have tried to raise money only in India, even though the options have been available. But at that point of time again, if it's secured debentures, the kind of security that the market demands is because you will have a debenture trustee, and the kind of security that is needed, your assets get valued a fair bit down. For example, when we had to raise, we had to put some fantastic piece of land as security for the debenture trustee. I think markets are emerging, markets are evolving better these days. We are talking with SBI only, and green bonds, which in our parlance will become blue bonds, but blue bonds are potentially listed, and we would try to see whether we can actually list it within our GIFT City exchanges. These would be, to a certain extent, even without securities. Today is because because the flavor is there. To a certain extent, we may be able to raise it, but otherwise, for a capex heavy industry like a shipyard, and shipyards have got funded. Shipyards have got funded by debt, but again, the security is the point. And I want to bring in an angle here. It's actually the expertise, because today here, with due respect, there is only one State Bank of India in the country which can actually come in and play that kind of expertise. For example, I build a shipyard. What is the kind of money a banker will come and support, or you can raise from the markets? Somebody needs to really understand the value, and the value is not a normal valuation game. This is, you are trying to value a shipyard. So I think the deep-rooted expertise in the debt markets, I really wish that this country, long time back, 40 years back, we had the Shipping Creditor Investment Corporation of India. We had an SCICI, which got merged into an ICICI, and ICICI later became a bank. But we created the right institutions, but then I thought we let go the institutions.
That goes, sir. It is correctly picked up. We should, the maritime, instead of shipping, the maritime specialized financial institution should have been there. What if the gentleman's opinion, the banker's opinion, supposing we recommend, this panel recommends, the top 5 banks in the country join together, create a JV type, where you specialize only for maritime financing, including ship financing. Would that be a feasible solution? So the regular bankers are not aware of certain nuances of this maritime industry.
No, I will like to try to deviate here. Today, bank is able to finance lot of risk they are taking. It's only the experience in certain sectors, like shipyard, for example. We had ABG shipyard, Bharti shipyard. Then you have shipping, for example. There are shipping also, you have got 3 subsectors, whether it is a tanker, whether it is a container market, whether it is a bulker. Each of these things has a different kind of a revenue profile. and each of them have survived. Some of them have survived and some of them has gone. Unfortunately, in the banking parlance or wherever, whatever you take, even if you take a shipping institution, they will have to follow certain guidelines and norms of the regulator. That regulatory norm is not going to go anywhere, whether you like it or not, whether it is bank or whether it is an FI today. In fact, a lot of FIs who had been created like an IFCLs or NAFID of the latest and all those things, they are slowly getting governed more and more by RBI guidelines. One thing is that any new institution which comes in, its capital base would be smaller vis-a-vis a bank like a state banker. And in fact, we have created large banks today like a Canara Bank, Bank of India, because of merger of all the banks actually. And as far as education is concerned, we are able to go as a financial intermediary to the banks and we are able to finance long-term, real long-term solutions and financing for the banks. Banks do have a covenant which is there for foreign banks also, that if your ratios they come down, you will have to definitely go and supplement. And as Madam said, once it goes out of your charge, then getting back is very different. Only thing is, again, you come back to me, I will refinance that. So that's okay, fees for me, but release of security for Madam, that's okay. So there are institutions which are getting built, but over a period of time, they again have been converted, whether it is IDBI, whether it is all other institutions, which IDBI was also initially not a banker, it was an institution. So they are getting converted because at the end of the day, the bank can go and needs to raise fund from the public as a part of it. So yes and no to that, but I think it's still a long way away actually. Anyway.
I just want to add a point here. See, when you have financing infrastructure, like say shipyard, I come from the shipbuilding side. At the end of the day, the shipyard is to build ships. Now you're getting into another business. Infrastructure on the shipyard is one part of the business. Shipbuilding and shipbuilding finance is another part of the business. See, 2016, April onwards, shipyards are under the harmonized list of infrastructure. But to my understanding, not many banks have actually funded it from the infra point of view because the banks have had a problem with the infrastructure if it's a shipyard. Why that problem is, that is not coming from the infrastructure. That's actually coming from the shipping part of it. Because one thing which many people don't fully appreciate is, in shipping, in shipbuilding, for $100 billion shipbuilding turnover, the banking volumes are almost 2.5 to 2.8 times, which not many people are fully, the cash and the non-cash part of it. You can actually go wrong on the non-cash side. And this is what has happened whether it's Pipavav, ABG, Bharati or TEBMA shipyards. Why we are saying very confidently is, TEBMA shipyards, we have restructured it through the IBC NCLT route. Today it's our shipyard. But how a shipyard goes bad, it's not on the infrastructure finance, the shipyard goes bad on the inability to pay on the non-cash side, because there are refund guarantees involved. And the refund guarantees, many times when a shipyard goes bad, the refund guarantee sits with the bank. And if the bank didn't have that kind of deep expertise in financing, the whole thing goes down like a stone.
Since the subject of infrastructure is there, I think in one of the earlier panels in the morning, they suggested that shipping should be given the status of infrastructure. So I'd like to clarify to the audience on that issue, that the matter relating to shipping being considered as an infrastructure was discussed in the government and in the Ministry of Port, Shipping and Waterways on a number of occasions. But shipping continues to be a service industry. So service per se cannot be covered under infrastructure. So I wanted to clarify. And that is one of the main points of shipping finance, that since you are not an infrastructure, you get financing for a maximum of about 6 to 8 years. Even if I was to go for an ECB, it would be maximum for 7 years. And while the age of the vessel runs into 25-30 years, the debt financing and the servicing has to be over a very short period, which really pains a ship owner.
Thank you. I know this is this question I am addressing it to Mr. Naveen Kolathur. How is the recent ESG stipulations going to affect the maritime industry performance, particularly logistics industry? And though the West has adopted to such an extent, what is the status of India? Are we fully in compliance with the ESG guidelines or where we are going? I'm talking about a lot of emissions is happening. Basically, ESG is nothing but, what are the stipulations that recently government has put in the government GEO?
So I think I would say we are directionally in line, but in terms of distance, we have a lot to catch up. I think that is the simple answer. For example, we had consul from Germany, right? They have a supply chain due diligence act that they passed last January. So basically, what that means is any German company or any association, it doesn't have to be German headquartered. So even if they have a branch office in Germany, any of these companies, anywhere in the world, they have to be ESG compliant. It's a law. How many Indian companies are ready for this? I don't think we have done much. In fact, the German, consul has been going around the country trying to educate our SMEs and how to be compliant with that law so that this business, so we are talking about, okay, there's big delegation is come and all these things, but at the grassroots level, are we prepared for that? No, we are not. Particularly we are talking finance here, but one big area is compliance. Compliance is a big pain area. So when we talk about ESG, nobody talks about compliance. In the global, compliance index, we are a red country. There can be a debate, but it is a red country. So in that sense, to answer your question, in terms of ESG, I think directionally we have taken the right steps, but in terms of distance, we have a lot to catch up. And one of the areas is definitely women and, increasing the women, workforce in that industry. It's a completely male dominated. We were talking to one of the companies here along with the Tamil Nadu Skill Development Corporation, and they are interested in increasing the number of women seafarers. So there are a lot of initiatives being done in that space, because when we talk about ESG and maritime and shipping, a lot of discussion happens only on sustainability, but then there is the governance piece completely gets missed out. I think governance is a massive piece, but it's inconvenient to have that conversation. But I think if you take these acts that the Western countries have been doing, their focus is governance a lot more, and somewhere there is sustainability as well. I think so. There is a lot to catch up. There are lessons to be learned from various countries, but we will chart our own way. I don't think we can follow any model, because we started the economic trajectory much later than many countries. So we cannot be paying for their debt, right, as is our stance. But I think we are moving in the right direction.
Thank you. For the information of all people gathered here, the ESG guidelines are going to be strictly followed. The West is hard pressed for that. In case the specific countries are not able to adopt the ESG countries, or some lacuna is there, getting funding from the international funding agencies like World Bank or IMF is going to be a little more tough for any country for that matter. That's what they are pushing to, and they have told indirectly to the global banks, put a tab on this. This is what is now at this point of time.
Just to add on ESG, SEBI has already mandated that top 1,000 companies by market valuation. In fact, Sir would be compelled to inform in his balance sheets, annual report about the aspects, and then assurance is going to come later. Indian banker is also guided by these guidelines, because they are going and raising funds. In fact, my bank actually suggested, we were trying to talk to other day, JM Bakshi, that how do I able to give a cheaper fund to a player who's more in the maritime industry ESG compliant. For example, our MCLR today, if somebody says 8.8 or 8.9, of course it is related to inflation, but still people can give cheaper loan subject to if we are able to get a source of fund, which we are getting, and able to deploy to an industry within ports and other industry who are ESG compliant. So these things are coming. This thing is not very far off as a part of it. Anyway, shipping is governed by IMO. We already have a lot of things which is over there, so it is there, it is going to come any which way.
I think this, since you touched upon the point of ESG, see for an organization like Cochin Shipyard Limited, which is an active player in the European green shipping segment. So we are actually building green ships. We have built vessels which are fully green. We are building vessels which are methanol. And these are people who are procuring the ships, securing green funding. So they are actually being funded by either the Enova of Norway or some other green funding sources. They have a requirement to make sure that the organization they are talking to are also fairly ESG compliant. And for us, Sri Kolu brought it out very clearly. ESG is not just about the E part of it, but the social and the governance part is pretty strong for us. In the government PSU space, the governance was always fairly strong. Diversity and other aspects are being very closely looked at. I just thought I can inform the August gathering here that we are potentially India's first shipping company which on the environmental side has actually gone in for the Confederation of Indian Industry has got something called a Green Co certification, Green Company, Green Co certification. We went through this whole framework. We were Green Co Silver rated, and last year we have been upgraded to Green Co Gold rated. And as we are speaking on all the facets, whether it's the social part, strong corporate social responsibility initiatives, gender diversity, various other initiatives, on all the fronts, and what we are trying to do is, we have been bringing out guidelines because of SEBI mandation, even prior to that also. But what we have done is, like in the organization we are, as the sense of direction is very strong, the ESG framework is going to be embedded within the organization, both scope 1 emissions, scope 2 emissions, everything. And that as CMD, I am holding it directly. It's not any department. It is directly with CMD we are holding it.
So just to add to what Mr. Madhu Nair just said, that as listed companies, both Cochin Shipyard as well as Shipping Corporation, ESG and corporate governance is something which we need to be necessarily compliant with. And when we are talking about financing, you know, when you go for financing, the first thing that a bank looks at is your credit rating. And these rating agencies look into all these factors before they rate you. So if you are not ESG compliant, if you are poor on your corporate governance, it will show in your credit rating.
On the sidelines, I think we don't have a mechanism to monetize the carbon credits we have. Do we have? We don't have that market development. We have to go to the.
Not yet.
Now it's, this one is addressed to Madam or Banker can take. The recent decade we have seen exodus of ship owners from India to other countries. Two aspects. One is on the cheaper funding, number one. Number two, most important is the tax efficiency. The two things which basically the current ship owners have moved out. From 2008 till date, a lot of listed good entities have gone out. So what do you think would be a one single measure which will make them feel comfortable back at home?
I think the government has already taken the initiative in terms of the gift city, where they are trying to attract all those Indian companies which have gone overseas, either to Singapore, Hong Kong or to the Middle East, by attracting them to come back and set up base in the gift city. It's not only it's not only the cheap financing and the direct taxation. Even the indirect taxation has a lot of impact, both in terms of, for example, I'll tell you, Indian shipping company which has a place of business in India has to give extra as compared to a foreign shipping which comes and does. So under the GST, there is a clear disadvantage to an Indian shipping company. When you buy a vessel, there is again an import duty. Then the coastal bunking cost, the custom duty when you have to pay, when you have to take the vessel out for your dry dock. So these are all several things, you know, so it's not only financing alone. So there has to be, and compliances. compliances, we've been talking about, making business attractive in India and ease of doing business in India. So I think that also needs to be worked upon. And so it's not only the direct taxation, it is the indirect taxation, the custom duty, bunker cost, lot of things.
Thank you.
Just to add on the direct and the indirect part of it, I think when he was talking to one of the shipping companies, the first thing which he said is that can we do something on seafarers taxation? That is something which they get attracted, they don't get talent. The talent what is goes is, if it goes to the foreign vessel, it is zero taxes. Here they have to pay 30% taxes. That is the first thing which they have said. In terms of gift city, there was a mention that there is an ambivalence. Because today we are giving a tax based on a net tonnage taxation. If somebody is able to manage the net tonnage, then it is like 3-4% tax it comes effectively, because it's a. But if you have to go to a gift city, you have to set up a new company. So I think which Cochin Shipyard has gone, and you get a 10-year tax benefit, that's okay. And that is something which is available. So I think that gift city thing is still to evolve as a part of it. I think when the full ecosystem gets evolved over there in gift city, then it would have an impact, I would say.
Thank you, sir. I got a chip from the organizers that it's time up. Rather, the discussion can go on for next 2 hours also. It will be more interesting. I'd like to sum it up, being a conclave, I'd like to sum it up certain points which I think we can carry from this thing in less than a minute or something like that. One, what the thing is, the risk management practices connected to maritime industry has to be still more made aware, particularly with reference to credit, market and operational risk. And all these risks are covered automatically by the P&I insurance and the hull and marine, which the bankers can literally, they can say they are comfortable as far as funding is concerned. But they are not doing it for a very long term, because, and the one possibility is that we can suggest for issuance of MTN, you're talking about the medium term notes, which can fetch you for about 10 years or 15 years, which can be listed. It's a beautiful way of West adopted this method in US markets. One. Number two is most important. The major ports needs to be, we are recommending it, needs to be corporatized to make it, I would use the word, the efficiency part of it is not there, but it's more attractive to the foreign investors to come in and play. Because shipping and maritime has been 100% made FTA compliant. The third most important is use of, I would say, artificial intelligence and data forecasting. Everything we got a ChatGPT, we got a system now developing in the freight market or the fuel bankers or whatever it is available. Even forex rates are predictable to a certain extent. So the bank can make use of it. And most importantly, the banking system and the shipping, the entire system has to be integrated or synced together. In a sense, the freight rates have to be routed through the bank so that the bank is comfortable that this much of freight is coming. They can take a currency, I would say the currency hedging and other things in the international market they can do. Because they have got the expertise from that, not the shipping companies, to be frank. And most important is, there are various segments which are operating in the maritime industry. We recommend a formation of a Maritime Regulatory Authority of India, excluding DG Shipping, because DG Shipping powers are based that of the government. So, excluding that, can there be a single entity which can integrate all the sections of maritime industry? This is one thing. And of course, I said the top 5 banks can put together their money, whatever the surplus money for a long term, we can create a funding for shipping. And most important, you have to have a green bond financing mechanism, and which can be listed in the market. Right. And most important, shipping centers to be created for more inclusive growth of maritime friends. So these are all the few points I thought that the takeaways can happen. And I wholeheartedly thank the panelists in such a very short span of time. They had a varied experience and excellent views offered here from the experts. I think we'll give a round of applause. And thank you very much.